Hello, this is Centennial Scholars for the third quarter of 2020, and once again, we're unable to meet in person together, so I'll be doing it via video. The agenda today is we're going to go through the new statements from RBC, our switch to RBC as a clearing firm. We'll walk through the sign-up process for getting your account access online to be able to review it. I'll talk briefly about some of the tools we now have access to through RBC and some of the cool things we can do for you. And then I'm some other miscellaneous updates. I know this looks like a lot, but I promise we'll get through it quickly. So on the statements, I'm going to go through a sample statement page by page. I'm going to highlight what I think are the key areas. There are lots of similarities between the old statements, the first clearing Wells Fargo statements, and these statements, the ones from RBC. A lot of that is due to SEC requirements, but also the system they use has the same backbone, the same chassis. So there should be a lot of similarities and just little tweaks here and there. Some of the pages will have a lot more information. They've kind of consolidated some pages down into maybe 2 pages into 1 page. I'm going to break those pages down piece by piece so we don't get overwhelmed and we can zoom in a little bit. So this is the cover page. It'll have Centennial's logo in the upper left-hand corner because this is just a sample. It doesn't. But the basic information on the left, name, address, things like that. The right side is a little different from the past, and I think it's important. So we're going to zoom in here and take a look at it this way. This gives an overall overview of changes in account value on a year-to-date basis, and probably this period will mean month. It's possible that it will be for the quarter, although that's unlikely. Anytime there's activity, so even money market interest, things like that, it has to be reported to you on a monthly basis. So I would say 99.9% of the time this period will mean this month, but because it has to cover both, they say this period instead of this month. The change in asset value line, so you've got beginning account value, that's pretty self-explanatory. Taxable income, tax-exempt income. Change in asset value is unrealized gain or loss, which means the amount in each of those time periods that the account has moved up or down in value. Down each column, the math should work out. You should be able to add it or subtract it all together. The total portfolio value, the bottom part there, the estimated accrued interest is something different and new. Accrued interest is interest on bonds that you have earned but hasn't been paid out yet. So a bond might pay every 6 months. That's what most of them do. But every day you earn interest on that bond. And so it's adding in the interest you have earned but hasn't been paid out yet and won't be paid out until the scheduled coupon date. It's not actually money in your account, so don't be looking for it that way. It's just trying to give you a better overall view of the total account value. Like I said, it's different. Not everybody does it, but they do, and I didn't want you to be surprised. Page 2, this is your page of disclaimers. I don't think there's really too much I can add to this, so we're going to move on pretty quickly, but you probably will want to take a look at those when your statement arrives. Page 3 is probably the busiest page. So we're going to break it down doing the left side first and then the right side of the page. So this is the left side of the page. The top pie chart is the allocation within the account. It's a pretty broad overview. It's just giving you equities or stocks. So it's just giving you equities and fixed income in very broad baskets. It's a good kind of brief look, so you can look and see what percentage is stock and what percentage is bond, but I'm not sure it gives you a whole lot more other than that. The bottom is a gain-loss summary for the year. So the most important part, especially in a taxable account, will be the realized gains or losses, because that's the amount that you would be taxed on. Unrealized is just going to be, okay, I'm still holding the position, but it's either gone up or down in value, and totaling it up across the entire account. And then this is the right side of the page on page 3, and you can think of this like an income statement for the account. The top part is just cash, so it's just dealing with the cash in the money market, money coming in and out from selling something or buying something or dividends or interest, whatever it might be. It's just showing its impact on the cash money market part of the account. Remember, interest are payments from bonds, dividends, those are from stocks or preferreds or funds, things like that. And again, this is probably going to be a monthly report unless there's little to no activity, and then it would become a quarterly report. But you can see here, it just kind of breaks things down to give you an idea of, okay, we started this period, this month, at this amount of money. Here's all the changes that happened, and here's how we get to that total. So page 4 here is where we start to really get into the meat and potatoes of the statement. The top part there is cash and money market. If you're reading left to right, it starts with the description, which is money market, symbol, quantity, market price for a money market. It's always $1, so the quantity should always equal the current market value. The previous statement value, like I said, that'll probably be the month before. And then the annual income they're estimating off the money market. Moving down, we get to equities, which are stocks, although in this case it's a stock mutual or an ETF. So now I'm going to break it down a little slower. The description is going to be the name. So in this case, the name of the fund for the first one, the Vanguard Total Stock Market. Next is going to be the symbol, so that's VTI. Next is going to be the quantity, the number of shares, and then the market price. And that market price is the price that it closed at for month end, the closing price before they did the statement. Multiply the quantity and the price together, that should give you the total market value. I highlighted the net cost because this is a little different. The top line is the total net cost. But below it, it breaks it down between purchase and reinvest. And this is where people can get a little tripped up. So the purchase is the amount you actually invested into a specific investment, in this case, the ETF. The reinvest is if you have reinvest turned on for the dividends or the gains or whatever. It will show that and break that out. And sometimes it can trip people up because you look at it and go, well, it shows that I invested, $100,000 in this, and then I've got a huge loss. Well, maybe you only invested 50, and it's just reinvested so much that it's increased the tax basis, the cost basis to 100. And so it gets a little tricky. If you want to get lost in the weeds, you can dig down through there. I would suggest just sticking with, the net cost. The next column is the unrealized gain or loss. And that's basically how much it's moved up or down since you've held it. That's if you sold it. This is the amount of realized gain or loss you would have. And then the next column over is estimated annualized income. So that's, based on current dividend rate and the amount that you have, how much could you expect to get in income for a 52-week stretch? Down below that is international equities. Those are going to work the same way. Basically, all equities will work the same way with these columns. But I do think it's important to point out that for the different categories, you'll have different columns. So you'll want to make sure you look. If you look at the cash and money market, above where I have net cost circled there, it's not net cost, it's previous statement market value. So each little section, the columns will be slightly different. So you'll want to make sure you know which is which when you're looking at it. So this page here, we move on to fixed income for the statement. And this particular sample account has a lot of fixed income, so it's going to look like a lot. The top is taxable fixed income, and I think the most interesting thing to point out right away is the first one there, the Ridgeworth Fund, is a mutual fund. On the old statements, the first clearing Wells Fargo statements, it had a separate section for funds. RBC is lumping them together with their primary objective. So I'm going to kind of skip past the top two there and go to the third, which is Compass Bank Birmingham, to show you how an individual bond would be broken down. The bond funds will be broken down the same way essentially as the equities, but it'll be a little different with an individual bond. So you can see Compass Bank Birmingham, Alabama, that's the name. It also gives you the Moody's and S&P rating of that particular bond. And then to the right, not quite in its own column, it gives the coupon, the date due, which is the maturity date. DTD stands for dated date. That's kind of when the bond was created. And then book entry it's how the bond is recorded. There's very few, in fact, I don't think there are any bearer bonds anymore, that you hold the bond and you clip the actual coupon. Book entry it's just held on a ledger somewhere, and they keep track of who owns it. The next column over is symbol / QSIP, and that long number there is the QSIP number, and that's kind of an ID number. Basically, all the publicly traded investments have their own QSIP number. For a stock, you would just use a symbol. Same thing for the mutual fund, but bonds still do trade on the QSIP numbers. Quantity for the funds, it's just the number of shares. For bonds, it's done a little bit differently. It's the face value. So bonds are done at $1,000 face value each. So if it's showing 50,000 there, that's 50 bonds. That part can be kind of tricky and throw people off, and then I'm going to add to it in just a second. But that is where we can see people get thrown off. So 50,000 there means 50 bonds, 50,000 in face value. Moving to the right, where it shows market price, for a bond, market price is really more of a percentage of face value than anything else. So right there it shows as 110. That means that it's at a 10% premium, and so instead of being worth 50,000, it's worth a little more than 55,000. So if it were to say 95 for the market price, that would mean it was $9.50 a bond, and so down $50 a bond from the face value, so trading at a discount. That part can throw people too, because you look at it and go 50,000 times 110 a bond is not 55,000. You have to think of it more in percentage terms. The next column over is the top line is the market value. So like I said, you take the 50,000 times the 110%, you get 55-ish. The next line under that is that accrued interest that we talked about earlier. It's interest that's earned but hasn't been paid out to you yet, won't be paid out until you reach the coupon date, which for most bonds is every 6 months. The net cost and unrealized gains and loss and estimated income, those are all basically the same as what we had in the equities. Net cost is what you paid for it. Unrealized gain or loss is the change in value since you've had it, and then the income is to give you an idea of what's coming. So the top three there are all taxable fixed income, which means obviously you pay taxes on them. Below there we get the taxable or the tax exempt fixed income. Those are going to be municipal bonds. Across the board, reading the statement, those are going to work the same as the taxable bonds. It's just a different come tax reporting time. So on to page 6 here, it's a lot more tax-exempt fixed income. I do want to point out here, I'm saying the page numbers because they're on the top right of the screen. This obviously is not going to be the same for everybody. Every person's statement is going to be slightly different. The ordering will be the same, but you might have 3 pages of stock holdings and a couple lines of bond holdings or none or another page. It's all going to be different. Just think of it more in this is the order that it goes in, rather than, okay, well, this is page 6. I'm supposed to be showing these bonds and I don't have that. Don't get locked into that. So we finally reached the end of the tax-exempt bonds, but you've got a huge category like this, and how do you organize and take a look at the total? Well, the red box that I created there, that's how it totals up all of the tax-exempt fixed income for this particular person. I wouldn't worry too much about the quantity. They actually had a mutual fund that is tax-exempt, so that got thrown in there too. So it's not pure, this is how many bonds you have. It's a little thrown off. I would kind of disregard that column. What I would look at is the market value and accrued interest, the net cost, the unrealized gain and loss, and the estimated annual income. And those are going to be all of the tax-exempt bonds added up together. So it gives you an overview of the entire category, how that stacks up combined. You can see below there, we have also other assets. Those are going to be held or categorized kind of the same way as equities. In this case, it's kind of a couple odd little ETFs that the gold one is pretty well known. The other one is just kind of a weird thing to have on a sample statement. But you can see the columns are all basically the same, or they are the same as the equities. So there's not a whole lot for me to add there. So page 8, this is the activity detail. So it's going to give a chronological order running tally of what happened during the period. And like I said, the period is most likely going to be the month. So you can see for this sample statement, they started the month, and the first thing they did was on the 1st, they reinvested some dividends. They did so on the 2nd also, and you can tell it's a reinvest if you look all the way over to the right on the section that says comments, and it says reinvest. But you can also see moving down on the 21st, they bought the ultra short treasury, and they bought the Vanguard Total Stock Market, and you can see it gives you a running tally for the month of the total. In this case, they're all purchases. But it goes left to right, the date, the description, the quantity, the price, the net cost, so how much you paid for it, and then that all gets totaled up at the bottom. So that was for the purchases. Now we move into activity for sales and things like that. So on April 1st, looking left to right, on that top line there, the Arizona Health Facilities, that's a bond. You can see it says on the 4th line under there, cash for called issue. That means that bond got called and so got redeemed. They took away 30 bonds at 100% of face value, so you got $30,000. And if you weren't sure if it was, geez, did I sell this or did they call it? If you look over all the way to the right under the comments, it does show redemption as another way of seeing that this was a called issue. Next down is taxable income. So you had the Compass Bank pay their semi-annual interest payment. That money came in on the 1st. So you can see money coming in from there. Also below that is dividends from one of the mutual funds. Same kind of thing, left to right, date, who did it, what it was, and the amount. And then we get down below there, and then it's the same kind of thing, but it's for tax-exempt income. Do notice that each of the sections totals up the amount at the end. So you can see for total taxable income, it does total up all the way over to the right at $3,192.97. And it does, like I said, total up for each section. Tax-exempt bonds starts at the bottom page and finishes at the top of this one. So the same kind of thing. It totals up the total amount of tax-exempt income there at the bottom of the section. Then below that, it gives detail of the money market. So this is going to be funds in, funds out of the money market on a rolling basis. The one thing that's a little goofy to me is instead of going straight down the line, you have to go back and forth, so it goes left to right. So if you look at the dates, the first line, 4/1/14, balance forward of almost 273,000. You don't go down next, you go to the right, because there's 4/2 for a purchase that was 32,200. Then you go back to the left side, 4/22, back to the right side, 4/24, 4/30, 4/30 for the ending balance. So don't think it's just straight down, you have to go back and forth, but it is going to give you kind of a running, these are the various things that happened in the money market, in the cash during the month. Whew. Okay, so that is the statement. You might have some questions there. Like I said, everybody's going to have something different as far as how the statements look. So if you have questions on those, give us a call. Happy to walk you through it. So moving on to online access. RBC uses a different system for online access than First Clearing did. Signing up is a piece of cake, though. So you sign up at www.investor-connect.com. And then after that, you can access it through our website, centennialsec.com, to be able to look at your account and get a view of what you have and all of those kind of things. So I'm going to walk you through how to sign up for the online access through RBC. You go to the web address, Investor Connect. This is what the main page looks like, and I put in a helpful little red arrow there so you can see where the Register Now link is. It's on the left there. There is some information required, but the only thing that you probably don't have in your head already is an account number for your account with Centennial that's now with RBC. Everything else that you would need, you probably know by heart, but you will need to have an account number with you to register. So once you click on that register link, this is where you get started, and there's 3 pages basically that you have to do, and this is the first one, and there's no action really required. All you have to do is read through it and then click that button next on the bottom right. This is the second page. This is the one where you would need to enter some personal information. So you're going to need to enter your social security number, your date of birth, your zip code, an email address because they're going to want to confirm your account. You don't have to enter a mobile phone number. You can if you want to, but you don't have to. And then you do need an account number. Your account number with RBC is going to start 7U7. And don't make the mistake that I did when I signed up and try to put the dash that shows in the account number in that box. They don't need it. So it's just 7U7, and then it will be 5 more numbers, and that will be your account number. So we get to this page, and this is page 3. This is where you create your user ID and your password. This is information that we're not allowed to have. The SEC won't let us have your user ID or password. So if for some reason you forget it, we don't have it, but we can help you get to the right folks at RBC to reset it and reset your account. Once you get through this page, you can add additional accounts. One thing I will point out is if it's under a different social security number, if the account is. So in my case, I went to add my wife's account. It wouldn't let me because it's a separate social security number until she signs a piece of paper. So they mailed a little booklet She has to sign it, we send it back, and then I can have access to her account on my online access. If you don't want to do that, that's great. You can just head in and view your accounts. I wanted to give an overview of the tools we get through RBC. They have a great platform called Black, and Black takes a bunch of these standalone tools and integrates them together, and they all talk to each other, and they all talk to the RBC system. So things like positions and account goals and things like that can get moved around between all of these programs seamlessly. So the financial planning tool is MoneyGuide Pro. That's kind of the gold standard of financial planning software. It's nice because it's very graphical and you can get a look without being just hit over the head with numbers. For portfolio and risk analysis, that tool is called Riskalyze. It does a really nice thing. The picture at the top there that looks like a speed limit sign, that's how they display their data. So you'll get a risk number for your portfolio and a risk number for you individually, and then we can try to match those up. I've actually been using this a little bit already. We were given a trial before we officially started with RBC. I think it's a really great tool. And then there's just some operational things too that are going to make our lives easier and make data gathering and communication a lot easier. Circle Black is a data aggregation tool. Redtail is a CRM. We're viewing those as helping with efficiency and operations. And then there's a lot more tools that will be used to a lesser extent. These are going to be kind of the main pieces that we'll be using. So if I say, hey, I'm going to send you this risk questionnaire, it's probably going to be from Riskalyze, and then we'll go from there. All right, so a bunch of miscellaneous little updates here. The first, paperwork. So we know it was a lot of paperwork coming to a lot of you with the move to RBC. More or less that's done. There might be a page here or there that we have to do in the future, but the big thick packet of stuff that's really hard to understand, that's all done. If you're curious about why we chose to move to RBC, I put a blog update on the content library of my website, kind of detailing our reasons. I know that people have been a little curious about why we chose to do this. I think it's laid out pretty well there, and I don't want to sit here and read you the whole thing. So if you're curious about that, it is on the content library part of my website. And then speaking of my website, I'm trying to post content weekly. Usually Tuesday, Wednesday, or Thursday. It's not consistent which day of the week, but I am posting pretty much once a week. So if you're bored, I guess, go ahead and take a look and see what you think. And then the last thing is just trying to give you an update on my dad, on Don. He had his kidney replaced kind of mid to late June. The picture you see on the right there is he and my younger, I haven't been able to say little for about 20 years, my younger brother, Matt. Matt was the kidney donor. That was before they went into the hospital for the procedures. Everything's gone beautifully. Don's walking up to 5 miles a day. Hasn't had any real issues since the operation. Everything's going great. So I wanted to give that little update because I know I talked to people here and there, and some people knew what was going on and some people didn't really. But so everything's going great. He's doing well, and he's out probably doing more than doctor's orders. I thought this quote by Warren Buffett was a great way to end it. The best investment you can make is an investment in yourself. The more you learn, the more you'll earn. I feel like I threw a lot of information at you today, but I think it's all really important stuff. But if you have questions about statements or online access or anything else, please let me know. All the contact information there is on the left. We are basically back in the office every day. I'm working from home here and there, but for the most part, I'm in the office. But if you call the office number, even if I'm working from home, they can get in touch with me. So I hope you, I won't say had fun, but I hope you learned a little something today. Like I said, if you have any questions, give me a call, and hopefully I'll be able to see you all very soon.